The hidden truth about America's debt crisis, what the media won't tell you. America's debt crisis is often treated like background noise in mainstream media, acknowledged in passing, but rarely dissected with the urgency it deserves. Politicians deflect it, pundits oversimplify it, and the average citizen often feels too overwhelmed to ask the tough questions. Yet behind the glossy economic reports and political finger-pointing lies a growing financial time bomb. This video peels back the layers to reveal what the media won't tell you about the true nature of America's debt crisis, why it matters to you, and what could happen if things spiral out of control. A crisis decades in the making. America's national debt has skyrocketed past $34 trillion as of early 2025, a staggering figure that continues to rise by billions daily. This isn't some abstract number floating in a void. It's the cumulative result of decades of overspending. Tax cuts without matching revenue increases, military campaigns, bailouts, and unfunded social programs. Both political parties are complicit. Republicans have championed tax cuts with little concern for the fiscal consequences, while Democrats have expanded social spending without adequate funding mechanisms. While debt in itself is not inherently bad, many nations and individuals borrow for growth. The scale, trajectory, and structure of U.S. debt is what's alarming. America now pays over $1 trillion a year just in interest payments, more than the defense budget or Medicare. These are funds that could be used to rebuild infrastructure, invest in education, or tackle climate change. The debt ceiling theater. The media loves the drama of debt ceiling showdowns. Every few years, Congress haggles over whether to raise the limit on how much the country can borrow. What often gets lost in the coverage is that raising the debt ceiling doesn't authorize new spending. It allows the government to pay for what it's already committed to. The fact that such payments even need separate approval is a testament to how broken the system has become. Each debt ceiling standoff shakes investor confidence and creates uncertainty in global markets. Yet little is done to address the root causes of the debt crisis. It's political theater at its finest, and the audience is paying with their wallets. Inflation, interest rates, and a dangerous feedback loop. In response to inflationary pressures, the Federal Reserve has hiked interest rates multiple times. While these rate increases are aimed at cooling inflation, they also dramatically increase the cost of servicing the national debt. Higher interest rates mean the government must pay more to borrow the same amount of money. This creates a dangerous feedback loop. More borrowing leads to more debt, which leads to higher interest payments, which in turn require more borrowing. Over time, this loop threatens to consume a larger and larger portion of the federal budget, squeezing out essential services and investments. Foreign dependence, a hidden vulnerability. Another hidden truth about America's debt is how much of it is owned by foreign governments. Countries like China and Japan hold massive amounts of U.S. Treasury securities. While this has helped keep borrowing costs low, it also introduces geopolitical risk. If a major holder were to dump U.S. debt or stop buying it altogether, it could send shockwaves through global markets and spike interest rates overnight. This vulnerability becomes more significant in an increasingly multipolar world where economic relationships are growing more strained. The U.S. relies heavily on the assumption that other nations will continue to prop up its borrowing habits, but that assumption may not hold forever. The myth of infinite borrowing. Mainstream economists often argue that the U.S. can print its way out of debt since it controls its own currency. In theory, that's true, but in practice, it's a recipe for runaway inflation and loss of global confidence. Just ask countries like Argentina, Venezuela, or Zimbabwe how that approach worked out for them. The dollar's strength and status as the world's reserve currency have shielded the U.S. from the worst consequences so far. But even that shield is not impenetrable. If the world begins to lose faith in the dollar, hyperinflation and currency devaluation become real threats. The generational time bomb. One of the most underreported aspects of the debt crisis is the impact on future generations. The government is borrowing from the future to fund the present. Every dollar of debt must eventually be repaid, either through higher taxes, reduced services, or both. Today's students, workers, and young families will inherit a mountain of financial obligations they didn't create. This burden stifles economic mobility, limits opportunities, and creates a cycle of dependency on government programs that are themselves unsustainable. It's a generational theft in slow motion. Entitlement programs, the elephant in the room. Social Security, Medicare, and Medicaid are sacred cows in American politics, but they also represent the largest chunks of federal spending. These programs are not fully funded, and their costs are ballooning as the population ages. By 2035, the Social Security Trust Fund is projected to be depleted, meaning benefits would be cut or taxes would have to be raised significantly. Yet politicians rarely discuss meaningful reform of entitlement programs, fearing backlash from voters. The media, meanwhile, often focuses on short-term political wins rather than long-term sustainability. Corporate welfare and military spending. Another angle the media underplays is the role of corporate welfare and bloated military budgets. While programs for the poor are constantly scrutinized, billions in subsidies go to profitable corporations and defense contractors every year. From farm subsidies for mega agribusiness to tax breaks for oil giants, corporate interests continue to feed at the public trough, largely unnoticed. Meanwhile, America's military budget dwarfs those of other countries. While national defense is essential, there is minimal accountability for wasteful spending or redundant programs. The media's role, distraction and simplification. Why doesn't the media dig deeper into these issues? One reason is complexity. The debt crisis involves intricate financial systems, policy decisions, and long-term projections, things that don't fit neatly into 30-second soundbites or clickbait headlines. Instead, the media often reduces the conversation to political blame games or sensational doomsday predictions. What's missing is honest, nuanced reporting that educates the public on the structural causes of debt and the difficult decisions that lie ahead. Time to wake up. America's debt crisis isn't just a future problem. It's a current growing threat to the nation's economic stability, global standing, and the quality of life of its citizens. It demands more than partisan rhetoric or short-term fixes. It requires bold leadership, tough choices, and a willingness to confront uncomfortable truths. The longer we ignore the ticking clock, the louder the explosion will be when it finally goes off. The time to act is now, not when it's too late. Let's hold our leaders accountable, demand transparency from the media, and educate ourselves on the real state of our economy before the crisis becomes irreversible. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.